All right, we should be live. It's notifying the Discord that we're live on YouTube today. So far we've had a big gap up here. Bulls got a bull bar on the first bar, but then they had bad follow through. These two bear bars. Bulls created sort of a double bottom here and got a good signal bar. And bulls that bought above that could have scalped above that. But they're not liking the follow through from this bar. So it looks like the open here will be similar to yesterday. In the way that it's a breakout mode pattern. So you'll have people looking for bull bars to buy above like this, and they're looking for like this and like this down here, and they're looking for bear bars to sell below, like here. And so like here, breakout mode pattern, good looking bull bar to buy above for a swing up, good looking bear bar for a swing down. So both sides are trying to break out of this range, hoping for a swing. Bears are hoping that they can sell here, and this would be a high of the day. You can see how far we gapped up. I mean, where we got so far, the moving average is still 30 points below. Daily chart, clearly just a huge gap up. So what I'll do, we still have this gap from down here that's open right there. I'll draw another one for this. So, I mean, the bulls have clearly they've had a lot of buying in this tight channel here. I feel like they're getting a bit overextended. I think they've had a bit too much buying after all this selling. It seems like it seems like the Bears want to test at least a little bit down here today. And it just seems like the bulls are a bit overextended at this point. The overnight low is way down here. Just for making it easier to see whenever I move this gap here. We'll put that on if that gap remains open after today. But for now, we can tell the gaps here, so I don't want to clutter up the screen. Something I mentioned in the stream yesterday was that the open was an important price. I mentioned that here. So we have the opening price, and then we see market reacted to it a bit here. Broke out, pulled back, and hung around it for a while here. And then clearly you see all the touches it made here. So once you see the market touch the open twice, so this would be one, and then you see it a second time here, the market tends to remain an important price for the rest of the day. See all the tails that formed here when it tried to touch it. You see how market was trying to pull away, got two good bull bars, and then it failed to go higher with this bear bar, and then it came right back down to the open. Then double bottom at the open, and then went away. So once you see the open be an important price a couple times, it tends to continue being an important price the rest of the day. So good follow through bar for the bears. So bulls are trying to get a double bottom here. The market wants to break out of this area. It's setting up for swings in both directions. A swing here, swing short here, swing long here. So we had a day recently that was like that. Kind of similar to this. Buys here, sellers here, and buyers here and here. The difference is we were much closer to the moving average. We had it was plausibly a double bottom at the moving average. While today is way from the moving average. So the reasons I would not buy above this: one, it's not at the moving average, unlike the other day we were looking at. The other day we had this basically the same type of pattern, but it was at the moving average. Second reason, this bar is large. It's 11 points. Now it is a good looking bar. We're still on the short from this, so sellers here. They're still holding with a stop above here. Now, if someone's going to take this, then they need to basically be betting that it's the low of the day. So they don't want to take this for 2 points, 5 points. They want to take this at a minimum for 2 times their risk. So if they're buying here, they need to be swinging for up here or more. This really to me, this is just the minimum going for this target here. But it not being at the moving average does decrease the odds of it. Hey, good morning, Lofty. Yeah, so I was kind of talking about how I feel like we're starting to get a bit overextended on this rally. It doesn't mean it can't keep going up, but after this big sell-off, I feel like we're starting to get to a point where not only has it gone up, but now we're accelerating up after we've already had to move up. We have this big gap up after we've already gone up so much. So I'm happy to buy with a good long setup. But I just feel like the market is starting to enter a phase where it's near the end of this bull trend instead of near the beginning. So I've been talking about this is a breakout mode open. So we're getting good signal bars. Good buy here, good sell here, good buy here. And the market's wanting one of these bars to be either the low or the high of the day. So if they're buying here, they want it to break out of this range and continue up. If they're selling here, which the sell is still on because their stop is here, then they're hoping that this is the high of the day, and then it trends down to yesterday's close. So the market is not wanting to stay in this area. It's not going to be in this area right here for much longer. So good looking follow through bar for the buyers here. They're pleased with there being a bull bar closing near its high there. So they're pleased with that follow through bar. I was comparing it to Tuesday's open. So this is what Tuesday's open looked like, and you can tell it has a similar form to it, where market had a bull bar on the first bar, then it made a double bottom here, and we can see we made a now this double bottom was a higher low double bottom than this. This close here and this close here were higher, versus this double bottom here is actually lower than this open. Another difference is here we're credibly at the moving average. This could be a test. You can call this a test of the moving average. Double bottom at the moving average. While this is far from the moving average. I would rather see it to be a test at the moving average. Well, you can see once we got the double bottom, bulls were able to buy above. They were able to get a swing up. So they weren't just buying for a scalp and then getting out. They were buying and holding all through this. Then once we really started to get that breakout, so we got these three strong bars. Then you can see these signal bars. So once there was signs of strength and the market was going up, you can see any of these little pullbacks in a bull bar were bought. So once we knew the market had a reasonable chance of going up, you can see how entering would have worked. Buying here, above any of these bull bars. Yes, I have a 20 moving average. So on all my charts, I use a 20 moving average and I use a 200 moving average. And this is an unusual case where the market gapped up so high that the moving average still hasn't caught up. I mean, we gapped up like 55 points. So a difference in this breakout that we're getting here versus this one, here we had three bars, all of them closing near their highs, with a third one closing very strongly, right? Big bar closing on its high. Here we have two bars that are comparable, but then the third bar is not materializing like this. So I would call this as being weaker than this. Still got this. I mean, it's still follow through. It's still closed above this previous high right here. So it's still kind of the minimum that the bulls want. But not as strong as this. And so not as strong as it could be. Now, if we get two more bars up that are not large, but there's still bull bars closing near their highs, then that effectively would be this. So, bulls can be strong either by having large bars, or they can be strong by owning time. So if they just continue to move up over time, then that's strength as well. Let me pull up the 15-minute. So this is kind of what I was talking about. Like we have first bar, second bar. Instead of the third bar being one big bar, where we have two. This bar starts to close, but we would have two or maybe three good bull bars, and that's effectively the same as having this one large bar. So instead of them owning price for 5 minutes in a big way, they're owning price still in a strong way over 15 minutes. So now it is starting to look similar in the way that this close here was right around the high here, and we're getting to close right around the high here as well. So if this can close well, I'm gonna switch to the micro. I'm gonna try to demonstrate a trade. So I want this to be a good close if I'm gonna do that. I really want this to close near its high, or else I'm not gonna bother. Okay, so that's not good enough for me. Let me show you what I was thinking about doing. So this is what we've been looking at as a comparison. So we've got these 3 strong bars, and what I was thinking, whenever we get consecutive strong bars like that, especially on the open, you can look for a measure move up. So at this point, when this bar closes, there's a 60% chance that the market will get up to this price before getting to this price. All right, so your risk reward is basically 1-to-1, but you have a 60% chance of getting your target profit first. So what I was thinking about doing, if we got a good close there, was I was going to buy the close up here, put a stop down here, and then go for that measure move up. But with that tail on top, then I'm not interested. Jay-Z, good morning. I'm glad to see you on here. Jay-Z, I know you were in the stream yesterday when we were talking about the open, how it right here we were talking about how it was going to be an important price the rest of the day, and you can see what happened the rest of the day. Tails kept touching the open there. It was trying to break out, and then you got this good looking bear signal bar. So especially later in the day, if I see something like that, I'll try to short for a move back to the moving average. Here the bulls got 2 good bull bars. They're breaking out of this range, but then we got bad follow through. Then they got a double top, and then a good bear signal bar. So bulls are getting out of that, and bears are shorting, hoping for a test back to the open. And the evidence is there, like how big this bar is. So that's what bulls were getting out, and bears were shorting. So whenever you see the open tested twice, so test here, and came back and tested here, then it typically remains an important price. So now bulls are trying to move up still, trying to get a good close up here. Yeah, if we did get a good close up here, like this or better, then I would go ahead and try to demonstrate that trade, buying here, stop down here, and going for a swing up. Be something like that. Let me look to the left, see what kind of targets you might have above. All right, so we have a previous high there. So yeah, that's a very important previous high. That's where the strong selling started, was from that high. So that's an important price. This open is also an important price. Just gonna draw that in. So whenever you have a big sell off, the the start of that sell off it's an important price. So like this open of this bar, that's a target. All right. So I'm gonna go ahead and demonstrate this trade.
Order submitted. Order filled.
So what we're doing, we're basically betting on the swing up, and so we've had these 5 strong bars like this up. Now, looking at this example we had on Tuesday, we had this good double bottom, 3 strong bars up. So instead of getting 3 strong bars up, we got 2 similar bars, and then three decent bull bars. So effectively, this is the same as what this is. So this had more. This was strong in the sense that it had owned more time. This was strong in the sense that it owned more price. So effectively, they're the same. And when you get I'm sorry, I don't the video might not be capturing everything off to my left side over here, so I'll try to keep it on the screen. When you get 3 strong bars up like this, what you can do is draw a measure move up, and then we have these 3 bars, and then measure move up, somewhere up here. You have a 60% chance of getting here before getting stopped out down here. So based on that, that's a profitable trade. And effectively what's happening here is the same as this. So I'm going ahead and buying, and if to take trades like this, I'm just demonstrating here how you would do that. Looking at our example here, you can see how bulls made money on any of these. After a bear bar, this little pullback, bull bar, you can buy above, a little pullback, bull bar, buy above, and that worked the whole way up. So as we're taking this swing here, I'm not going to get out just below a single bear bar. I would wait for a more credible top. So this here is a more credible top because it's a double top. So you get this bear bar here, and then try to go up again and got a bear bar. Now you can see if the bulls did put their stop there, they'd be stopped out, but the market continued. So if that happens, then you can buy again. So if you're stopped out, then you get a reason to enter again, then you should enter again and try to continue the swing up. Really, the only issue I'm seeing with the bulls here is that we are far from the moving average. You know, the moving average still hasn't even come up to the lows of the day. That's how far we gapped up. All right, so bulls got another bullish follow through bar, and that's the minimum they were looking for. They were they closed right at that high. They were very close to closing it one tick above, which would have been better. Let's see if they did it on the ES, because that's the more significant. All right, so on the ES, they also closed right at that high. It would have been better if it was at least one tick above the high. But still, now we have six bull bars in a row. I was talking yesterday how 5,500 would be an important price, and we just gapped up right through that, and are now heading higher. At some point here, there's going to be, you know, like I don't want to say we're due for the buying to end, because you can be due for that for a long time and it can just keep going up. But I do feel like we're getting a bit overextended here. We had all this selling, and then we had a lot of buying through here, and now we're getting even big gaps up after all this buying. So I think basically the market is look at here. It's been a lot of time in this price range, kind of around this 5,500 number. It spent 5 days here, broke above, then pulled back into that range. So I think here we're probably testing higher to see if it's a good price for the market higher, and it's going to find out that it's not, and it needs to pull back here to test back down to this more common price. But I'm not just going to short because of that, because it can go on a lot longer. So earlier we were talking about some ideas where this is a breakout mode open. So people were buying above this bar, selling below this bar, buying above this bar. And they'll take these trades. This is how people trade on the open. They'll take these trades betting that they'll get the higher the low of the day. Because the higher the low of the day normally forms on the open. So, so they buy here, it it fails. They sell here, it fails. But if they get this buy above here, and then this does end up being the low of the day, and then this ends up going 50 points above, or at a minimum. If they're doing that at a minimum, then they need to go for two times the risk. Put some up here. But a lot of times you'll see people say, "Oh, I only trade the open and I'm done in the first hour." Well, so this is what they're doing. Well, some of them, uh, and it's a logical way to do it, right? So this was yesterday. When did the low of the day form? Well, it formed here, and you got a buy signal bar. So you bought above this, and ultimately we're able to get profits up to here. Looking at the previous day, where was the low of the day? It was here, and then you got a buy signal bar, and you could have bought, got a swing up like that. Where was the low of the day? It happened here after this double bottom, uh, buy signal bar, and where was the high of the day? It happened up here, which is still kind of 11:15, so kind of basically still around the open, and then this was the high of the day. So you actually were able to buy and make that, and then sell here, and you're able to do both the low and the high of the day. Here, low of the day, low of the day was here, buy signal bar, and swung up. Uh, you're saying you enjoyed yesterday's trade, so it's not enjoyable to be having to hold that long like that. But I'm glad I was able to show it, because it's just a great demonstration of how the market actually works, right? I mean, the reason this came back here like this, well, in part it could be because the market was coming back to the open, but to me, I mean, bears sold here. This was a good bar for them to be selling. They had a failed second entry long that failed. Market should have gone lower here, but it didn't. And then the first reasonable bar to sell below was here, and then you can see right where the market came down to on that bar. It came down to one tick above that median price. So you can see the bulls and bears were trying to front run that price a little bit, and this short was also following this wedge here. So first push, second push, third push, then a short, and then after a wedge, you can expect two legs down and 10 bars, and well, we got first leg, second leg, and that was about 10 bars. So, yeah, I holding like that's not something you want to do, but I'm glad I was able to show it, because that's what a lot of the funds do, and that's why the market looked like this, because that's what they are doing. But you ask yourself, is that going to be fun for you to do? Are you going to be able to manage that correctly? And really, the answer is going to be no. Like, no, you're not going to have fun doing that. You're probably going to lose a lot of money at different times doing it. But it's just really important to understand, like, this is how it works. So now we've had 7 consecutive bull bars, so bulls are managing to keep the buying going here. So you can see none of this was particularly strong, but the bulls are owning the market in terms of time. All right, they're just consistently moving the market up. So at this point, I'm going to go ahead and move my stop up, put it there. So now, I mean, yeah, it could come back and stop me out, but I'm also avoiding that risk if this becomes the high of the day. And I'm perfectly fine with this, because I've looked at the data on my trades, and by me managing them this way, it's more profitable than if I could just keep my stop somewhere down here. So bulls got yet another bull bar there. Now this tail is, it's a it's not the kind of tail the bulls wanted to have on top. However, after all this buying, it's reasonable to think that the market still has room up, and that this tail won't be. I don't think this tail will really matter too much. So there's three outcomes that could happen here. The market might just continue straight up, and we just take the profit up here. It might go down here, and this becomes the high of the day or the high of the next few hours, and well, then we'd be stopped out with a small profit. The third outcome is that it goes down enough to stop us out, but then it ends up continuing up. Now, in that case, if you get stopped out and then you get a good reason to buy again, then you want to make sure you're buying again. So you can see from our comparison, there were shorts. There were people had reasons to get out. Some might get out below this bear bar or this one. It's probably better to wait to get out below a double top like this and get out. But if you got out of any of these, then you want to be buying again above a bull bar. So you want to be buying again here, 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 or here, or here. So if you're getting stopped out, you want to make sure you're entering again if the market's going up in that direction. Let's look at the Nasdaq. Yeah, I pulled up the Nasdaq a couple times yesterday and was looking at the differences in it. So, look how tight this channel looks on the Nasdaq. Wow. So probably gonna be stopped out here, but maybe not. It's interesting how different these two markets look, even though all the biggest stocks are still in them both. But yeah, that's surprising. Gapped way up, and it's just trended right up since then. At some point, this is going to touch the moving average. So at some point, we're either going to go down or go sideways enough for this moving average to catch up. If you guys have been watching me for a bit, you know that they've been working on the apartment pool, and apartment pool is still not open. It's August 15th, and they're still out there talking about it right now. So normally when you get a big tail on top like this, then you need to be concerned. I'm not as concerned in this type of move up. So this is a small pullback bull trend, and so is this. So it's when the market never really looks all that strong, yet it just continues up. So if you can identify you're in a small pullback bull trend, then really want to be in the market and just riding that small pullback trend up. So to me, this is just, I'm not seeing this as the market getting overextended right? Just because of the context of that, we are in a small pullback bull trend, so we're expecting these little pullbacks to happen, but it would just continue up.
Stop filled.
All right, so we got stopped out there with 2 or 3 ticks of profit. Now the idea is if we get a bull bar, we'd be buying above that, and then once again do it for a swing up. And of course, that's probably going to be just stopped out at the just at the right price before it continues up. I do think it's reasonable we could expect a move like this today, where it just kind of, it's subtle, but it just continues to move up. You can see the similarity here, and contemplating on the 2000 tick buying above this bar. It's a couple legs back to moving average and a good looking bull bar. Now, I'd only buy that if I was going for at least 2 times my risk up. I was kind of hoping for a better channel here. I am tempted to buy here. I think this might be a better channel for the way up. I have concerns that this might be a final flag here. So we had this move up, and then these two sideways bars like this. Now I know what I was saying. If this is a small pullback bull trend, it kind of always looks like it's going to be starting to trying to reverse, but just continues up. There was something that I kind of touched on yesterday that I want to touch on again, and this pattern looks similar through here. So looking at this, what I'm really looking at is this bull bar here, and the idea of buying above that for a swing up. So what we have here, the market's going down, tries to go lower here, and it can't. Then it gets above the moving average here, and what do you get? You get, when it tries to go lower here, tries to go below the moving average, it tries to go below this high and this high, but it can't. And you get a bull bar. It tries again, and it can't, and you get this strong bull bar there. Now, if you buy above this, probably the majority of the time you will be the market will end up going back below that bar. But when it doesn't, you're going to end up with a strong move up like this. So I think that's a reasonable type of trade to take, especially on the open. On the open. So this would be 1020 there. So the market, here's 940s. The market's trying to go lower, can't. Trying to go higher, it can't. Trying to go lower, it can't. So the market is trying to find which side it's going to break out of. And when you're here buying somewhat low in the range, after we're back above the moving average and after the bears have failed a couple times, I think that'd be a good swing to be trying to take. And with that, I'd really want to be going for even more than 2 times the risk. That might be a 4 or 5 times your risk type trade, because you're betting on it being the low of the day. So you buy above, put your stop below. You risk 3.5 points, knowing you're gonna have to deal with losing that most of the time. But when you don't, you could be making 20 points or more on a big swing up. So I think that's a reasonable trade to be taking. And I think what I've recommended to people is, if they just take like a month and only take trades where you're swinging and you're going for multiple times your risk, and only take it in the direction of the trend, then you're going to be much better off. That'll be a much faster path to profitability than probably anything else. I think one of these days we should only trade the 2000 tick chart, because usually my focus is so heavily on the 5 minute, and the 2000 tick is just supplemental. But if you really watch the 2000 tick chart, there's a lot of opportunities. So one of these days we might kind of just flip it and just try to really just focus on taking those types of trades. Let me put my channel back on here. Yeah, so I think this is a better channel here. The lows are touching and the highs are touching. Hey, good morning, Velco. I'll thank you on the 2000 the 200 subs there. If you guys didn't know, Velco helped me set up the Discord as well, so he was a big part of getting that Discord going. Uptrend day till the close. Well, it could be. We've been using this day as an example, and that basically went up the whole day. So, really look at Tuesday closely and try to trade it like Tuesday. So anything that worked out Tuesday, like buying above pullbacks, swinging, buying the moving average and swinging, like those are the types of trades you want to try to be taking today. So Velco, we had taken one trade. We bought one of these bars here. That's why we had this measured move in. So we bought this the close of this bar, betting after these 5 good bars there'd be a measured move up, and we're on track for that. Um, we did get stopped out here, so there was 2 or 3 ticks profit. Um, but the idea with buying here was that there's a greater chance that it will get here before coming back down here. So it would be a profitable trade buying that. I was considering taking this trade here, buying above this signal bar. And if I had, I probably would go ahead and move my stop up to either. So now that we're breaking above this little high here, I'd probably go ahead and move my stop up to a couple ticks of profit if I was long there. So I mean, think about it. What kind of trades are you gonna be more happy taking? Um, you're gonna be more relaxed and happy taking like the types of trades that we've been discussing here. Buying above bull bars and in the bull trend, and swinging, and then just moving your stop up once it goes far enough. It's gonna be a much more comfortable type of trading instead of trying to scale in all through this. Yeah, I'll say it again. If you've been watching me for the last couple months, I've been mentioning the apartment pool's not open, and they're still out there working on it. So if you hear noises, that's what they're doing. Patrick Wayland. I haven't personally watched his videos. If you guys want other channels that I learned from, just let me know. I kind of mention them here and there. So, yeah, I can. So two guys that trade the 2000 tick chart. One is Thomas Wade, and then the other guy's name is Mac. And his channel is Price Action Trading. So if you want to learn more about the 2000 tick and how to trade it, and I recommend that you do, I think it'd probably be like a lot of people. I think it'd be better to trade on that chart. By the way, if I'd taken this long, I'd move my stop up to here at least, maybe even higher. But so these two guys, you can look them up on YouTube. They usually post reviews at the end of the day. So if you want to learn 2000 tick, you can do that, and then I think everyone knows Al Brooks. His thing is the 5-minute chart. So if you guys want to learn either of these, you know, those would be, if you want other channels, those would be good too to look at. So we did get stopped out on this trade here. We did get, a couple ticks of profit on that right in here. If I was still holding, I at this point I'd probably go ahead and move my stop up below this low here. So basically after this bull bar, I would have moved the stop up right below it. After that bear bar, probably would have kept it where it is. And after that bull bar, I'd move it up below the bull bar. And then once this bar closes, I would move it up below that one. Then looking at the 2000 tick, I'd basically just get out below any bear bar at this point when we're this close to our profit. But the key through all this, and what have we been talking about? Have we been talking about shorting this market? Or have we been talking about getting long? It's going up, so you need to be thinking about getting long. You don't need to be thinking about, oh, there's this tail, I can sell above it, and don't spend your time trying to think about how you can reverse the market or be creative and bet against reversals, bet for mean reversal. If the market's trending, you want to figure out how you can get in on the direction of the trend, not the opposite. So the E-mini is it's got it's got a it's kind of got a it's at a pace that I like. It's not too fast or too slow. It's reliable. The all the guys I learned from that I just showed, like Al Brooks, Thomas Wade, Mac, all of them that I learned from, well, they pretty much exclusively trade the E-mini. So I'm sure if they had traded all done the Nasdaq, I would be trading the Nasdaq. But I learned to trade the E-mini, and after 10 or 11 years, I understand the E-mini now, and so that's there's there's still potentially dozens of trades every day on the E-mini, so that's plenty. So bulls get another close above the previous high. So bulls are still strong. ES is the granddaddy, Nasdaq is the bad girlfriend. So yeah, I kind of agree with that. I understand what you're saying. I see that's kind of their personalities. the Nasdaq has been in an even tighter channel than the E-mini has today. I mean, look at these first. Uh, look at the bars until 11 o'clock. It was just like this very tight channel up. Huge gap up, then two bull bars, then just consistent moves up. At some point today, the market's going to touch the moving average. Now, it can either do that by the market going down to the moving average, or the market goes sideways and the moving average just catches up. So this has ended up being even stronger than our example here. Here we had a spike and then a channel. And then here we basically just had, I mean, it's been like it's been a very strong small pullback bull trend. So this is like a small pullback bull trend. You get these little pullbacks, but the market just keeps going higher. Whereas here, I mean, really we had a spike and then a small pullback, then we're continuing just to go almost straight up. So it's unfortunate that we got stopped out here. But I think whether I leave my stop down here and risk it coming down, or bring my stop up and go ahead and just take the couple ticks of profit, I think for me it's better for me to manage it like that. What you could do is wait for a better bear bar and then sell below that. Now, I think that would have been better for me to do. I probably could have waited for more bearish evidence and then move my stop up. But either way, if the market's going in one direction, the right thing to do is to get in on that direction. It has been surprising how strong this market's been, but isn't that always the case? So here, this is the daily chart of the Emini. Here, everyone thinks markets collapsing, time for recession, and then it goes up. Here, everyone, once again, it's time for recession. It's the end of it. It's the end of this 10-year bull trend we've had, and then it just gets bought up. Anytime the market goes down 10%, 20%, anytime that VIX gets above like 35, I mean, that's when all the buying starts to come back in. And it just happens over and over again. Right when everyone is convinced it's the end, then that's when we get strong moves like this. So if I was still long here, I'd be getting out below. If a bear bar forms like this, I'd be getting out below that. You can look at this as a double top. It's not the best looking double top. And it's following such a strong move up here, so for me to actually get short, I need to see more. But I do see this as a possible double top. All right, we have this tail here. We'll try it again here, and then failed. But after all this strength, just one bar is not enough for me to enter a short. In fact, normally after all this strength, that first bar like that will actually be bought. I'm gonna step away for about 10 minutes or so. So I'll be back in a little bit. All right, so we can see the market is still working its way up. It's it's gotten pretty close to our original measure move target. I want to see if I can adjust this now and see what might be a better, perhaps a better target. So I like to draw measure moves off of uh, multiple strong bars in a row. So which is what I did on this day. So we had 3 strong bars up, and then that's clearly what the measured move target should be, is these 3 bars, and that puts it up here. It gets a little less straightforward when you have multiple small bars like this. You know, where exactly is the measure move? Is it off of this bar, or should it be at the at the at the highest bull bar like that? You know, it's just not as clear. Other things we can do, we can go from this low to this high of this range, and then that puts us up here. Another option is looking at from this low to a breakout point or a gap. So how I see this here, we have this high and these highs. We broke out here, and this pullback, the bars did not overlap. The bodies did not overlap. So this is a bit of a breakout pullback. And then from that point, which is basically where we had the measure move before, but the reason is that there's this breakout point and this gap here. So that's one. Another idea would be an even higher gap. So perhaps something like this for this gap here. So we broke out here and pulled back, but never bodies did not overlap. I think we're going to hold it here. Both of these targets kind of come into the same place there, so I think that's what we would look for a target. Not sure if I was still on the looking at the charts at the time, but you can see here we had a failed to go lower, double bottom, bull bar. You know, if you bought above that, go over 2 times your risk. You wouldn't have gotten the profit target yet, but you at least would have been able to move your stop up here a couple ticks above. So no matter what, you're either going to get your full profit or get out with a small profit. You know, and these are the types of trades you want to be looking at on the way up. And this trade here we were talking about, which I almost took, couldn't quite pull the trigger, was you know, if you held all through this, then you would have gotten your profit here. Although I probably would have just gotten out below like this bear bar here. So you guys talking about uh, So you laughed. I saw you're talking about Python here. Um, what I had done before, I'd used Python before to do some back testing. Um, what I was doing was pretty simple. I would download the the bar data from NinjaTrader, and then uh, I was doing just simple tests like if there were two closes above the open in a row, so like this for example, like how often was it above that close in 10 bars or 50 bars after that. I was just kind of doing stuff like that. I wasn't able to find anything that was like statistically significant. I really didn't do much testing. I just did a little bit, but it was fun to mess around with that, and it was fun to kind of look at it from a different angle in that back testing way. Now that I mention it, I might try to make a little small project out of that again, and uh, just kind of try to collect some data. So like if you have, let's say you have 3 bars in a row that are like bear bars. So if the close is below the open, um, what percentage of time 10 bars later is it lower, or what percentage of time 50 bars later is it lower? You know, because just kind of knowing some of those types of data points could help you in your trading. You don't need to know those, but it might. I think it'd just be kind of fun and interesting to know. Or if you get 2 bars in a row that are up, what's the odds that the third bar is also? What's the odds that the third bar closes above the that second bar? So the market's starting to get a bit of a wedge pattern. So we got this leg up here, pull back, a second leg, and a third leg. So we have that. We also have a bit of a micro wedge. So we have this bigger wedge. We also have this smaller wedge here, right there. So we have these nested wedges. And if we get a bear bar or something like that, I would be getting out of longs below that. It could be good enough for a short as well. Looking at the example we had yesterday, we had the wedge, and that first bear bar we sold below that, and that was a good short there. So we'll go ahead.
Order submitted.
I'll drop a small short here below that.
Order filled.
Right. Basically, we're going to try to go for... I didn't want the bar to be that large. I wanted it to be a smaller bar, but I think a lot of bulls will, if they've been long through here, they'll probably go ahead and get out of that. So this is something that I'll plan on scaling in with. Looking at the daily chart, we're starting to get closer to the sell zone on this open here. This open was the start of this big sell-off, and once you get around that, that's more of a sell zone. Santosh, we need more positivity. And the reasons we're selling here, we have a wedge. We have a larger wedge, these 3 pushes. Then we have this nested wedge here, and should be able to scale in higher as needed. Well, thank you for your best wishes. And the good thing about this is trading small, so I'm able to scale in higher as needed. The closer we get to this open, the more the bulls are going to be taking profits up there. clearly not the follow through we wanted. Should be fine to wait for a bear bar and sell below that and scale in. So we're starting to get more trading range price action. All right, we have bears selling above bars. We have this overlap like this. This kind of, if you look at the last 10 bars, this is different from previous 10 bars or the 10 bars before that. So any bears that we're selling here, got bad follow through. Any bulls that were buying here got bad follow through. So both sides are being disappointed. Probably more likely, more more of a transition to a trading range is happening now instead of a continued strong trend like this. Nasdaq's looking similar, where they've had a lot more overlap in the last few bars than they had been. We were talking about how strong that Nasdaq looked up through here. Now you can actually see the seller has been making money above here, above here. Sold here, scaled in. Sold here, scaled in. So let's say this bar became a bear bar. Probably wouldn't sell below it. I feel like it'd be too close. I'd rather wait for some higher. Yeah, not enough for me to sell below that bar, and I'd rather, if I'm going to sell below some, I'd rather it be a better short higher up. A bit of a spike in volatility on that bar there. Testing this measured move. So measured move from this low to this high. So we're testing that now. We're basically at this other measured move as well. So when we get a good bearish signal bar, we'll add on below that. Couple key prices above. Draw both of those in there. So the lines I just drew above, they are it's these two prices. So the open there and the high there. So as the market's moving up, it's looking, the market likes to get up to the, whenever there's like a big sell-off like this, the market likes to get up to that open. So it looks like that's what it's trying to get up to now. I'm trying to find the right channel now on the 2 tick chart. So if you ever plan on scaling into a trade, you need to make sure that you trade very small. So that your total risk is no more than your risk would be on a normal trade. Market's probably getting a bit overextended here. We're 2 hours into this trend, and we're starting to get larger bars later in the trend. Not to say it doesn't have more up. Not to say it can't go up more, but just the observation. We've been in this trend a while. Then you start to see bigger bars later in the trend. It's a sign the market might be starting to get overbought. 100% of days touch the moving average. So either the market goes down to the moving average, or more likely the market will go sideways and the moving average catches up to it. You can see on this day, the buying really happened. It kept going the whole day. And how did the market touch the moving average here? It was that it had went sideways and the moving average caught up to it. But what I was commenting on, the market starting to look overextended. You can see at this bar, we had been in the trend for a couple hours, and then we started to get the largest bar later in the trend. Then here we got a strong move again, and then really we ended up just going sideways for the next hour after that. Let's say the bar closed something like this. Uh, it's probably not enough for me to sell. I'd rather get a second entry short, some sort of double top, and then I would add on below that short. I think another measured move target would be this. So you can see it's from the low to this gap and this breakout point here. So you have this high, market broke above it, and bears tried twice to get below it but couldn't. So that's a good area there, and that measured move puts us up here. So I do think this is the correct measured move now, from this low to this high. It's the way that this became the breakout point here. Broke out above it here and couldn't pull back. So I do think this is the right measured move there. Looking for wedges. I think we'd have a push there, second push, and third push is kind of subdivided here. Maybe it would just be like that. First, second, then third. So for me to sell below one of these bars, I'd really want there to be a double top and a secondary short. Just out of curiosity, here's the gold chart. Still hanging out around these highs up here. Crude chart had 4 strong days in a row. Now we're having a bit of a pullback from that. But look how it is bouncing off of the moving averages, the 200 and the 20. Yeah, so even if this bar closes below its midpoint, I'd still rather wait for a secondary shell. I'll be back in about 10 minutes. I'm just going to grab something to eat real quick.
Target filled.
All right, I'm back here. So I see we were able to profit a couple ticks there. Uh, didn't even need to scale it higher. Yeah, Nee, that's a good observation. Uh, I, I assume you had just joined the stream. We've kind of been making comparisons to today's price action or yesterday's price action, but also Tuesday's price action. So this is Tuesday's chart, and look at how today looks compared to that. It's pretty similar. Um, we, if you want to go back and look at the, we'll post this stream later, and gave a lot of explanations how this was similar to this. See these three bars here, and then a measured move puts you somewhere up here, which it hit here. So when you get consecutive strong bars like that, like a breakout like this, it's more likely you're going to get to the measured move before you go to the bottom of the breakout. And then today you can see how we had a breakout here. So we had drawn a measured move based on probably from this open to this close, and that puts us up here. So that was the measured move we were looking for, and we actually bought at that bar. But unfortunately we got stopped out, basically a break even here before it headed up. Sal, I'm not sure if you're in the room now, but yeah, thank you for reminding me. The Apex is pulling away from their discounts a little bit. This should be a 71% off now instead of 80. So I've been trying to collect some data. A lot of people that want to trade, they trade. They want to be able to trade so they can go trade anywhere in the world. They can go to any country. All they need is a internet connection, and they can trade. Are there any countries you guys would want to go and be able to trade in? You know, that's kind of under the segment of like a digital nomad. People that can make like an American income in a country where it's cheaper to live, and maybe has like better weather, beaches, things like that. Are there any countries that you guys would be interested in knowing more about? And do any of you have that like that preferred lifestyle of being able to trade in a different country? Do you have any countries in mind for that? So I was mentioning at this point that looks like we were starting to go into a trading range, and so we're still in that trading range. So what were the signs that we were starting to look more like a trading range? Well, what do you see from all these bars here and all through this? It's basically just one direction. There's really not much selling pressure. Uh, Really, the bulls just have complete control over it. They're getting closes above these previous highs. There's a little overlap here, but for the most part, it's one directional. Only one side's making money. Versus here, you're starting to get bears can make money selling above here, selling above this bull bar. Actually, selling above here, and then they're able to scale in as well. They make money there. You start to see overlapping bars. This bear bar retrace all of this here. I start to see this bear bar and then a bull bar and then another bear bar. So there's confusion there. There's overlapping bars. Laughter, yeah, I believe you're talking about when I had the channel drawn over here. So if you're talking about that, that's a good observation as well, right? Like price was doing something outside of what it had been, and then you know we were having to like readjust to that. So that's a good point there. So what we've had, you know, basically this is a spike here. You can call this a channel. So I'll, you know, draw something in like this. So this is the spike phase, and this is the channel, and then now we're entering this trading range. Now, I don't know how long we're going to stay in this area, but but basically the market has played out the three stages: the spike, the channel, and the trading range. So you know now we'll we're, basically we'll be looking for a breakout of this trading range. You know, I see a bit of a wedge pattern here on the tick. First push, second push, third push. You know, I think the bars themselves on both the tick and the 5 minute look good for a short. So, but it's the context that is not quite strong enough for me. So we have this little bit of a wedge there, right? We break it down below. Now we got this wedge pattern, looking for like a sell below that or a sell below here. The 5 minute, I like how we've got this solid bar closing near its low, below the moving average. I like that. My concern is we have been so strongly bullish today, and I don't think enough of a reversal pattern has played out yet for me to really be looking for shorts. I'd really want to see the bulls fail to go higher one more time, and then I'd be looking for shorts. Because keep in mind, we're still in a trading range here, and we'd be selling near the bottom of the trading range. So I'd want to see more signs that the bulls are failing to go higher before getting into a short. So looking at Tuesday and Wednesday, both days have had sell-offs midday. So Tuesday had this 15-point sell-off in the middle of the day, and Wednesday had about a 30-point sell-off midday. But what did both days do? They continued buying through the close. As you can see, Tuesday basically bought into the close, and Wednesday, even though the open was an important price, uh, they bought until the close on Wednesday. So, I'm not sure if this is bull's going to fail to go higher here and then we're going to go lower, but I'm just pointing out that the last 2 days have bought into the close, and markets like to continue to do what they've been doing. So this is why I wasn't ready to sell here yet. Like, I think the bars were looking good. That's a good looking bear bar. Close on its low, below the moving average. Same with here. We have this little wedge, bear bar, the moving average, and then a secondary short here. But just didn't think the market was quite ready to go down yet. So, Lafta, do you mean this channel and we'll retest the highs, or do you mean possibly this channel? Or maybe so either way, yes. So talking about this bullish channel, yeah, the idea is the channel after the breakout below, the market tries to retest higher. We also have this bearish channel though, broke out. Kind of looks like it's failing to go lower, and then it's not going to test down here. So really, as of now, I'd put this as slightly more bullish than bearish. But yes, the idea is after the channel break, it tends to retest the highest price. So if this bar closes something like this, probably be a good long above it. Yeah, so bears had these 4 bars down. We can expect a little bit more after that than we got that here. So strong leg down, expect a second leg. That's probably the second leg there. Failed second entry short here. And bull's getting their long here. I don't want this bar to get too large. That's something that'll happen a lot. You're looking at an entry, then the bar just keeps getting bigger and bigger, and then it gets too big to be able to really, take your entry above it. And the reason that the larger bar will make me not enter trades is because if the bar is larger, then suddenly the risk is larger, and then also the reward is less because it's going to be closer to like these highs. So I have to risk more to make less. So what do we have right here? We have a lot of overlapping bars. We have tails below and on top. So I think it does better, but it's the weight. Just hold off. Just wait for it to break out in one direction. So the trend has been up, but I just do want to put this as a reminder that we're also in a trading range now. So I don't want people getting trapped into trying to buy, in this upper half of this trading range. I do think a breakout up is probably a little bit more likely, but the stage that the market's in is also, the wider context is important to remember that we're looking at. These are the signs of a trading range, and until this really breaks out of this trading range, we probably shouldn't be doing too much. Speaking of trading ranges, this is the crude chart. Crude's been in a much wider trading range for a year now. It's kind of been between this 90 and 90 and 65 for actually a year. You can see when you're in the trading range like this, strong moves down are bought and strong moves up are sold. So strong move down, attempt to break out, and it's bought. This gets sold. This gets bought. This was sold for 2 days here. You have real consistent buying all through this, and then it just evaporates. Today we had this strong move up where only bulls were able to make money. So only people buying above bars or buying closes were able to make money. At this point, bears could sell, but they could sell above this bar, but they really didn't make money unless they were able to scale in higher, some more up here, and then get out, break even here. Then they were able to sell here and make money without needing to scale in. Then at this point, they were able to actually sell below bars and make money. So we went from only bulls being able to make money to bears being able to make money selling below bars. So you can see how that transition slowly takes place. Right, you have the spike and the channel, signs of the channels that both sides can make money. Well, one side has to sell above and then scale in higher to make money. And then once bears start to be able to make money selling below bars, then you're starting to transition into a trading range. like I said, I do think there's a slightly stronger chance that we'll have a bullish breakout of this, but for now, I'm just waiting. I will say, kind of between like 1 o'clock, 2 o'clock, sometimes 2:30. That's a time when you either get a reversal or a continuation. So we had this bull trend, and normally around like 1:30, 2 o'clock, 2:30, um, we've been going like sideways for this for a while now, and then around this time of day, you will either continue that trend or it'll reverse. So let me look. Yeah, yesterday's not really the best example. I think this is a reasonable. So we were clearly in a bull trend, and then the market had stalled here for a bit. Bears tried to go lower, and then they couldn't. And then around that 2 o'clock, 2:30 time, the bulls were able to continue the trend up. So we have here on this day, the opening was a bit of a trading range, but ultimately we got this breakout. Then around the 1:30 time, this breakout failed, and it got this move down. This day kind of has both. So strong move up on the open, then we went sideways for a few hours, and then we managed to get a breakout above around that 1 o'clock, 1:30 time. So breakout happened there. So it continued what happened, but then around 2:30, ended up failing. And then we had an hour or so down. So a lot of the times around somewhere between 1 and 2:30, you'll start to see the trend either continue or reverse. The market kind of stalls around that lunchtime hour, and then as you get out of the lunchtime, then the market will continue its momentum, continue the buying, or it'll fail to, and then the selling will take over. So I'm going to end the stream at 2 o'clock. So if you guys have any questions, let me know before then. I'll be happy to answer anything. So on the open, I was talking about this is a breakout mode open. So bulls are buying, hoping for a breakout up, and bears are selling, hoping for a breakout down. So, so in theory, they would have bought here and got stopped out here. They would have sold here and gotten stopped out here, and they would have bought, and then this would have worked. So if they had done all three of those, which probably a lot wouldn't, they'd probably only, maybe they wouldn't, maybe they'd buy here and get stopped out here, but they wouldn't actually take the sell because of they might feel like it's been too bullish for them to sell here. Yeah, but let's just say they took all three of the trades. So they bought here 36, sold. So they lost 10 points there. They sold there. They lost 13 points there. So they're down 23 points. Down 23 points after these two trades. Then if they bought here, let's say they went for 2 times their risk. So that'd be 22 points there. So basically they'd be break even after those 2 trades. After those 3 trades. That's assuming they took both of these and lost both of these. You know, this was a pretty large bar to be selling below and risking up here. I don't know, with the gap up and then this double bottom, you know, maybe not too many people took that. But usually when people are doing this, if they take both, you know, if they take all 3 trades like this, usually their winner will offset the losers. And so let's say they didn't take one. Let's say they didn't take this, then they'd be up 10 or 12 points overall. You know, on most, like, I mean, this is a larger bar there, 13 points. On most days, your signal bars will be more like 5 points. So you lose 5 points here, lose 5 points there, and then you can get a 20-point swing. If you're trading this day, say you sell below that bar, you probably wouldn't lose here. And you probably wouldn't hold all through this. You'd probably get out above this bar. So you'd get a profit from selling from that and then get out here. And you'd probably buy that. And then you'd catch that swing up, that 20, 30 point trade there. So it's definitely viable to be trying to trade the open like that. You know, if you see like a breakout mode type where you are getting good bars, but it just kind of keeps on going beyond this low, then it goes beyond this high. But they're good bars though. I mean, it's overlapping, but it's not really trading range bars where they have lots of tails on top and bottom. Like, you're getting good signal bars. So when you see that, the market's trying to find the direction of the day. It's trying to find either the high or the low. And most days do find the higher or the low on the open. So it's definitely viable to try to trade like that. So one of these days, I'd like to, if we can open like this, I'd like to try to demonstrate that idea. So bulls that were buying through here, buying these closes, this is the highest close, so they would have bought that. Now, where do they scale in at? Some might have bought here, but it's only a first entry, so they probably waited for a second entry. Would have been right there. We had the tail here. That was likely due to the scale in bulls getting out break even there, created that tail. And now here, we're bulls are trying to get back to their first entry here. They haven't quite gotten to it yet. My guess is that they will. This opening, the open of this big bear bar here, this is really where they want to get up to. Like around 55.80. And then, 5600 is not far above that. I think we're going to have a trading range here, a bigger trading range. And really, we've already been in one since back here. After this big sell-off, then big up. All right, that's kind of that's a confusing market. Now we have gaps down here, but we also have targets above. So probably there's reasons for it to go down and up. So it's probably going to be trading range for the next few weeks. I would not expect a breakout here and to just go straight up. I would expect there to be both buying and selling in this area here. Bulls trying to break out here. Could be a bit of a cup and handle. All right, so here's the cup, and then the handle might be somewhere over here yet to happen. Well, so I'll be getting off the live stream. Uh, if I had a bet, I'd say the breakout is going to happen, and I bet it's going to be up. I don't know if it can still get up to these targets we were talking about through here. But those, would be targets for either tomorrow or next week. Tomorrow's Friday, so the open of the week is important price. Open of the week though is way down here. We're not going to get back down to there by tomorrow. So really, I think like this open here and this high are going to be important prices on the upside, and then important price on the downside is the high here of this gap. So right now, if you look at the weekly bar, it has a little tail on top, and it's a big bull bar at its high right now. So the bears tomorrow will fight to put a tail on the top of that weekly chart, and the bulls will try to get to close as high as they can. So that's what we can expect tomorrow. All right. Wiz, we were actually just ending the stream, but I was saying that I believe the market is more likely to have a little bit of a breakout here up. So, but we'll be back tomorrow. Wiz should be on around 9:30 or 10. So make sure if you want to come in the morning and watch all the action in the morning, and we'll be here. So. All right, see you guys tomorrow.